All right, guys, so today I'm going to run you through how to read price action. I'm going to build on what I taught in the last video. There's definitely more to it. And, as I learn more things, I'll share them with you. Here's some things I've been studying more lately. Some of them I already know, some of them I kind of figured out since the last video. But anyway, so in the last videos, we kind of talked about how the 930 open, that area basically is one of the highest volume areas in time of day, right? And everyone already knows that, but basically what I said is that's where liquidity can get hunted. Well, basically it gets deeper than that. So what happens is that's the open, but guess what? The equities close also is the other highest volume time of the day. So the 3:55 p.m. 5-minute candle that starts at 3:55 p.m. and ends at 4 o'clock p.m. New York time, highly relevant. Okay, so that's the other place where liquidity tends to get swept. So what you want to do is project these forward going to future days and see how price reacts to them. Now, you might see these color lines here. I may have briefly explained them in another video, but I'm going to touch on them again. I'm going to tell you kind of how to do them, but I'm not going to go into too much detail in this video. If you need instructions for that, let me know. It's kind of a pain in the ass, but you're going to have to kind of figure it out yourself, in my opinion. But I'll explain what I did, and then you'll have to figure out how to do it for yourself. But so, as you can see, stock market opens here. This is the opening 5-minute candle, high volume right there. Now, price appears to be confirming to the upside away from it, right? So it looks like, there's a long position right here, but the modified opening range right there makes that a little bit tricky, so it's kind of hard to tell. However, what's going on during this whole period is very important. So, as you can see, opening range, it goes up. Guess what? 8:30 a.m. That's when Fedwire opens. If you don't know what Fedwire is, it's the sort of interbank payment processing system that settles like T+2. If you know what T+2 is, you should know. If you're a trader and you don't know what T+2 is, go look it up, okay? It's T+2 gets settled at 8:30 a.m. Guess what? The very nature that T+2 is getting settled at 8:30 a.m. causes liquidity. There's liquidity at 8:30, okay? All these other lines, colors, these are different times of when different stock markets around the world open. So I'll let you figure out what to do, how to find those stock markets, but look up like the 10 biggest stock markets around the world and think, hey, maybe when traders have their open at those countries, maybe there's liquidity there later. Okay, how I achieve that is there's an indicator on TradingView called ICT Midnight and 8:30 a.m. open. Basically, it allows you to put 2 times per indicator, so I just put a bunch of indicators till I had enough. You can change the time of day. So what you have to do is figure out what time in the world those stock markets open, convert it to your time, and then make sure it's right on the chart. Sometimes these have issues where they're off by an hour too, so then you'll have to account for that too. But basically what you can do is you can check that time zone on the world, make sure that like when you set that thing, it's set to the right time, and then change it back to your time, make sure it's at the right time, so on and so forth. Do that until you've got like the top, I don't know, whatever I have here, the top 6, 7. So a lot of them open. There's some that open in the same time zone, so you only need one line for those. But anyway, price goes up above those, takes out, boom, 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 takes out all that liquidity, goes back up into the 3:55 p.m. candle, sells off, takes out low of day, goes back up, takes out one last stock market open right there. As you can see, that's clearly the exact reason why. Goes down, boom, 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 back through these areas. Then it's rejecting back to the upside. Colors outside the lines of the 3:55 p.m. candle. So I would say if one more candle closes up from the 3:55 p.m. candle, it's probably bullish, although you have to be careful and note that the 9:30 a.m. candle is right there. So again, it can get kind of tricky and nuanced because there's a lot of areas of liquidity where it can reject from, but right up there is another possible rejection level. But remember, this is a bullish biased asset. It's kind of in a little bit of a range right now, but it's, in my opinion, it's really looking to, oh, that's the weekly. I was like, wait, that doesn't look right. This is, it found a lot of liquidity here to sell off, but I know that it's got a bullish bias. So I think it's ready to take out this range and start heading for higher prices. This fair value gap, I know it's an ICT term, but like, let's be honest, there's definitely liquidity up here. So I think it's heading up towards the 16,400 level. And then From there, it's going to go up to like 16,700 up through here. It might have some issues up till like 17,000 or so. It could take a while, but I would say once it's like kind of once it's done with the sell side, like finding sellers up in these areas, it's gonna once it gets through that, it's probably gonna start ripping, in my opinion. I could be wrong, but that's just what I think is gonna happen. So again, it could be a slow grind bull market for now, but I would expect pretty like once it gets to 17,000 or so, I would be like pretty strongly bullish, honestly. Again, could be wrong, but that's just what my thoughts are now. So anyway, that's kind of my short explanation. Take care, guys. I'll see you next time.